I'm one of the fortunate few that stumbled into the ecosystem in 2012. And a great way to think about cryptocurrency is it's really the softwareization of money. Back in 2011, I think it was Mark Andreessen and Ben Horowitz published a piece of thought leadership that said software was going to eat the world, and they couldn't have been more right. We've seen software disrupt how we've communicate with each other. We're doing this over the internet now. We've seen software disrupt how we go to school. During COVID, people literally attended lectures on the internet. We've seen software disrupt how we purchase season tickets, how we go grocery shopping, everything. Software has now disrupted money. Cryptocurrency is the manifestation of software disrupting money, and we're seeing a lot of really exciting applications for it. So we ourselves are business builders in the sector. Our philosophy is beyond just accumulating cryptocurrency. We're not a company that helps you do that. We've got a lot of really diversified business lines that help you do everything from increase your awareness around it, help you access crypto markets. And we ourselves are adopters of some of these core protocols where we build applications on top of them. And NFT.com is one of those businesses native to the blockchain itself.
Software is now disrupting money, you said. Can you give us an example of how it's doing that?
Absolutely. So Bitcoin, if you go back and read the white paper, it's a fundamentally disruptive white paper. It talks about a global peer-to-peer currency. Bitcoin, and what I'm about to say is somewhat controversial, and I'm probably going to get chewed up for this on the internet, but it's really failed to deliver on that mission. Bitcoin today is not a peer-to-peer currency. It's a fantastic store of value. Bitcoin, due to its technical structure, it'll never do more than 7 to 12 transactions per second. We're never going to go purchase Starbucks with Bitcoin. We're never going to go, send micro payments every time you read a news article on the Wall Street Journal or watch something on Kitco every time you stream a video. It's really become a way to preserve wealth. There's only 21 million Bitcoin by the year 2140. All 21 million will have been created, but it's not a currency that we're using. It's really just gold 2.0. And I'm not the only one saying that. Stanley Druckenmiller, Ray Dalio, you'll hear those talking points from Paul Tudor Jones as well. And I believe everyone needs Bitcoin in their portfolio, but as a means of investment and as a means of preserving wealth. There will be other coins like USDC. This is a stable coin meant to be held stable to the US dollar. USDC is a great coin that can be used for anything within the context of DeFi. It can be used for angel investing. I personally have made angel investments in USDC. And in some cases, people even transact in day-to-day commerce in USDC, purchasing things on the internet.
Just on your point, and we'll move on to other blockchains, just on your point about Bitcoin's slow transaction speed, you're absolutely right. Bitcoin itself is arguably failed as a peer-to-peer transaction system protocol. But don't we have now second layer payment protocols like Lightning that are supposed to be enhancing that aspect?
Absolutely. And those definitely enhance the user experience, the end user experience. We do sacrifice to gain performance. We do sacrifice decentralization. We become more centralized with it. Every single time I've ever spent a Bitcoin, David, I've regretted spending that Bitcoin. So I think it's a really bad idea to go purchase Starbucks with Bitcoin. I purchased a house a little more than a year ago. I used a little bit of Bitcoin. The person I purchased a house from happened to be a crypto native person. I did that when Bitcoin was $8,000. He got a much better deal on the house than I did, because I'll tell you, my house is not 8 times in value the way that Bitcoin has. So I would highly argue that your users should not be purchasing day-to-day goods with their Bitcoin, but instead should be holding and storing that Bitcoin.